Major funding for these broadcasts has been provided by grants from New York Community Bank, M&T Bank, PBM, Customers Bank, Collins Building Services, AmTrust Title Insurance Company, Marks Paneth, Capital One Bank. Additional funding for these broadcasts has been provided by grants from Amerant Bank, Bank of America, Citizens Bank, Dime Community Bank, Douglaston Development Levine Builders, Flushing Bank, Friedman LLP, Handro Properties LLC Handler Real Estate Organization, Hodges Ward Elliott Inc., Investors Bank, James D. Kuhn Real Estate Institute at Syracuse University, John Catsimatidis Red Apple Group, Keysight Capital Partners, New Banks, Meridian Capital Group, Ocean First Bank, People's United Bank, RPW Group, TD Bank, and these friends. What's really happening in the condominium market? You read the press, it says that it's bargain times for shoppers. You talk to developers like Mr. Schlank, things are okay. You speak to Mr. Givner saying, maybe I should do that. So today, with the help of Robin Schneiderman, we have a great show on what's truly happening in the condo market. As I said, my guests include Chris Schlank, who is the managing partner of the Savannah Real Estate Fund, Michael Givner, who is the executive director at Morgan Stanley Real Assets, and my executive producer, with the assistance of his friend, Mr. Kliegerman, Robin Schneiderman, managing director, Brown Harris Stevens Development Marketing. So, Mr. Schneiderman, since you've given me questions, you've been there to be helpful, what's really happening?
During the pandemic period, COVID from last March to essentially July, the real estate market in New York City was shut down. I mean, we couldn't even show apartments. We started to, get back to some normalcy in terms of bringing people into, our new development projects, starting into, July and into the fall. I would say basically around October or so, the traffic really started to increase. People started to get a little bit more comfortable, going out of their homes and starting to, physically, visit apartments. One thing I can tell you is that virtual tours became a big help in just sort of getting people introduced to the projects within our portfolio. And then once they had an ability to come in to see the physical buildings, they were much more comfortable in terms of what they were looking for and what they were focused on. And then came 2021. We got the news of the vaccine, and that started to roll out. And people, all of a sudden realized that they were sick of sitting in their homes, and they were sick of being out in, the suburbs or wherever they were, where they escaped to. And we saw tremendous pent-up demand in New York City. I'm going to give you a couple quick stats because, as you call me the statistician, that's what I have to do. In 2021, so far, in Manhattan, we've seen 1,325 contracts signed in the first 5 months of the year. When you compare that to the previous 10 months, we are 15% above that. So we've essentially, outdone the last 10 months in the first 5 months of the year. And then specifically in the new development market, which I find staggering, the first 2 quarters leading up to July, we'll see approximately 840 units of signed contracts. That's a 60% increase in terms of year over year volume. This is really, really impressive. And what it's going to do, in my opinion, is it's going to start to eat into the supply, issues that we've had in New York. And that should start to see less negotiability and move from buyer's market back to a seller's market.
Chris, you're in the market. Let's talk about your great project, on the The Upper West Side, right near Columbia, right near everything.
So we've completed a 183 unit, 33-story building called the Vanderwater. It's in Morningside Heights. It's a block north of the Columbia campus, the old Columbia campus, and a couple blocks south of the new Columbia campus. So it's a great location. Morningside Heights is this beautiful oasis that people kind of know but don't know. And the interesting thing is that the people that are buying that, it's a very sort of organic buyer. And most of the people that are interested, that are buying, that are signing contracts, have some sort of a link to Columbia and to Morningside Heights. We called it the Vanderwater because before it was called Morningside Heights, this area was called Vanderwater. So we like to bring context, but it's a beautiful project. And
is the building completed?
We have 20 people living in the apartments. Out of the 183, we've signed 75 contracts, so we're about 40% signed. So people are living there happily. Plantings are in the front. We have a beautiful drive-in court. We have 2 other gardens, the east and the north garden. So a lot of outdoor space, 23,000 square feet of amenity space, 72 parking spots, private dining on the ground floor for residents. So it's really got everything. Tours are way, way up. Contracts, we've probably over the past 5 months signed 30 contracts. We've seen a lot of upgrades. People that had come and signed contracts 10 months ago when the building was just going up, came back, saw the construction, saw the actual building itself, felt the beauty and the love that we've put into this, and a lot of people have upgraded.
Has it taken longer for you to build the project due to the pandemic?
We were shut down for 3 months, during the construction shutdown. But as you know, when you have 250 men and women from 10 different sub-trades, it takes a while to revamp. So I would say effectively it was a 6 to a 7 month shutdown, slowdown. We were lucky we didn't have any COVID outbreaks, anything severe. So it was slower. Sales were obviously slower. But I must say our sales team at Halstead BHS has been amazing. And we are just incredibly active right now. So I must say I agree with the sentiment that the market is really roaring back. And I just hope that the contracts keep coming so we can grind through some of the inventory.
Michael Givner, you've been staying on the sidelines on this time. Let's talk about in the past Morgan Stanley's involvement in the condo market and the project in the future.
Yeah, look, I think we saw a little bit of a slowdown late towards the end of the cycle. And some of these projects which were coming out of the ground were just, taking a little bit longer to sell. As we fast forward to today, coming out of COVID, it's been an incredible start to the year. We follow the Olshan report and, over the past 17 weeks, we've seen 30 or more contracts each week, above $4 million. So the momentum is there. There was certainly the pent-up demand, but we think that, this velocity is going to come for the foreseeable future. I think you don't have a true foreign bid back in New York, and so this has largely been local demand. And with rates coming down, I think more and more is affordable, or at least within the reach of, a broader segment of the working professionals in New York.
My question is, since you always invest in different projects, what is the philosophy or the approach today? Do you think if Chris came to you or someone else came to you to project a project, let's say in Morningside Heights, or on the Upper West Side, or a project like the Benson, which I passed on Madison the other day, which is doing exceptionally well, would you go out there and make an investment in that type of thing?
Look, I think from our standpoint, quality of location and quality of sponsorship are 2 of the most important factors for us. And, you can take the example of the Benson. I think they're largely sold out, an incredible location with Naftali, a very strong sponsor. So I think for, those types of projects, they will continue to do incredibly well, almost through the cycle. I think what's challenging for projects which are, off of Main and don't have, an experienced developer behind them, I think those are certainly projects we would think long and hard about, even at an attractive land basis.
Chris, you're on the market all the time, and also Robin is on the market. How do you see lenders today view of the condo market?
We're not looking at any additional rentals, condos right now. But I can tell you, just with the negotiation for the extent we had to extend our debt, it was tough. I mean, lenders on the commercial office also are very, very difficult. Underwriting has changed. Downtime is way up in their underwriting. It's the new, and I'm not saying it's incorrect, and I think it's appropriate, and I think banks have to be protective. But I think that the banks' pullback has affected the amount of supply, which is going to be great for the demand supply curve. You see a lot less, and you mentioned the Benson. I mean, Mickey Deftali is a genius. Everybody knows that condo development and sales are all about timing. He seems to always hit the timing really well, and he's got a great eye. And my hat's off to him on his projects. He's done an incredible job. I'm not giving him Mickey Deftali plug here, but it's all about timing and the size of projects. Would I do a 183 unit project again? Probably not.
Robin, what are you seeing out there?
I think the debt is still available for condo for sale product. I think that the challenge really is raising equity. It's convincing guys like Michael Givner on the show to write a check to get a condo project. So we spend a lot of our time working with our clients' equity sources and debt sources to get them comfortable with the analysis and what the projects can achieve. Our data and research team is always peeling back the onion as much as possible to help tell a compelling story. And the truth is, when we believe in a project, we really go for it and help our clients get there. I do agree with Chris in the sense that there is a lack of land trades over the last, call it 2 to 3 years. And if the absorption that we're seeing in 2021 continues and we can sell off, say, it looks like about 16 to 1,700 units in the new development space, then we'll be left with probably around, call it 2 to maybe 3 years of inventory in terms of what's actively on the market and what we call shadow inventory, which is product that developers hasn't officially released to the market. The pipeline of future projects is, there are, projects behind that are sort of like, maybe they've been long-term assemblages that are finally going to be developed. There are some sort of bigger stalled ones that will come back to the market, like the 11, the XI project with Bjarke Angles. Eventually that'll get worked out. The 125 Greenwich Street downtown, 45 Park Place, the Hayworth. So those are sort of the 4 big ones. If you take those 4 together, you have probably another 700 apartments that'll come back to the market in 2022, most likely. One thing that I found interesting is land is starting to trade again, and it's happening much quicker than I expected.
Unfortunately, taxes are also rising in the city. Okay, at one time, you were able to build a condo or get some tax advantages. Right now, there are a limited amount of tax advantages. Due to the fact that foreign visitors haven't been coming here, are you seeing foreign investors making an investment today? Because I spoke recently to some individuals and they said to me that some of the luxury billionaire projects on 57th Street, 56th Street, right near you, Chris, where you're putting your office building, those type of projects are doing well, but the developers are giving more than the 8%, which is the number that Robin's research team said is the typical discount on a deal. Where do we see foreign investors, and where do we see how much percentage of a discount on the asking price?
I mean, I can start. Interestingly enough, because we're near Columbia, before COVID, we saw a large number of sort of investors from Asia buying for their kids. So I call them investors, but really buying apartments for their kids that were going to Columbia. When COVID hit, completely shut down. Obviously, there were no more investors buying. Once the university announced that they're reopening, we've seen a huge uptick in foreigners buying for their kids. And interestingly enough, they're buying larger apartments. They're not buying studios and ones. They're buying 2s and 3s so that their children can live there and then they can come and visit. So a very interesting trend. But beyond that, our project is not so sort of oriented toward foreigners because of where it is, because it's organic, and because there's a real sort of a New York City feel and touch there. But that's...
With regard to that, as you say, you may not be oriented to foreign investors, but what about investors, like Columbia or the Jewish Theological Institute, because they want to have faculty housing nearby, luxury, beautiful faculty housing with the amenities that you're offering?
Listen, we've talked to Columbia. We've been talking to Columbia for a while. I did a project up on the Upper West Side on Central Park West at 106th Street. We ended up selling it, but the Columbia faculty bought a bunch of units from the developer. We were talking to Columbia. We're very interested in potentially providing them with, bulk units for faculty. I think it's, with our amenities and our location, I think it's perfect. They're just a little slower to the punch, but we're still there. So,
Michael, as an investor, what type of returns, if you would do a new condo out there, what would you need to be enticed? Okay, how much equity would Chris have to put in? how would the stack, as we would say, play out?
Sure. Look, every situation's different, but this is an opportunistic strategy, and returns should be commensurate for as much. I think that financing today has come in a little bit, but I do think there is, financing available, both bridge and construction financing for, sites at the right cost basis, for product which, has pretty clear visibility towards selling out. I think scale matters. I think, some of these 200 unit projects are certainly more challenging. But all of those factors go into thinking through green lighting a particular opportunity. That said, to Robin's earlier point, we are starting to see land sales, land being the derivative bet here on the condo market. And I do think that given reset land pricing, it's an interesting time, especially with not a lot of new projects getting put into production throughout COVID.
Chris, years ago, you did a condo conversion at 141 Fifth Avenue, okay? Totally different type of project, beautiful project, came out well. How would you consider the times today as compared to that?
Unfortunately, pretty similar. We delivered 141 Fifth into, an 8 and 9 in the financial crisis. So we were pretty severely impacted by that. Although, as you said, it was a great project, great location, beautiful historic building, only 38 units. So the absorption was quicker, although prices were down. So this is a little bit similar, although a little bit different. Listen, the COVID crisis is a different crisis. The great financial crisis was economic. This was, a virus-born crisis that has led to some economic crises. But I think we're going to come out of this a huge uptick. They're similar because we're presented with very, very existential issues in both instances, in both sellouts, that we have to get around. And it's going to impact our return, but it doesn't impact our love. And I don't want to sound sappy, but our love and our affection for the projects that we're building. I feel still as good about 141, even though there was financial impact there, as I do about Vandewater. And Vandewater is going to have some impact as well. But they're two very, very beautiful projects that we stand behind.
One topic that my research head, Mr. Schneiderman, came out with was the topic of inventory loans. Okay, Chris, are you on an inventory loan? Michael, would you make an inventory loan? And Robin, how do you see inventory loans? There's different opinions.
So we've never taken an inventory loan. We did not take an inventory loan for Vandewater. We just did an extension with our existing capital stack. Inventory loans are difficult because you're dealing with a different type of lender. Inventory loans are typically with debt funds or a little bit more high leverage lenders that have different motives. And so when you enter into a inventory loan, you are taking out the expiring construction loan or mezz, which wants to get out, but you're replacing with somebody that's there for a reason. It's there for a stopgap, short-term solution that if that doesn't pan out, There's not that many ways out. I'll put it
Right, and it also has an effect on the people who purchased in the building, has a major effect. People don't really always look at that.
Yep, agreed.
Michael?
Yeah, look, these are things we'd certainly consider. We've also thought through bulk purchases. I think that the market is strengthening. And so, depending upon the project, sponsors are in a better position to find inventory loans, certainly than they were earlier in the crisis. But, we continue to think through risk-adjusted returns and, the right opportunity, would certainly be of interest.
Besides Manhattan, the number 2 place for condo development today is Brooklyn. Everybody loves Brooklyn, okay? As well as Long Island City. We don't want to hurt you because you do have some nice properties in Long Island City. What's really happening in the suburbs, okay? The suburbs of Brooklyn and, Long Island City and Queens, the Flushing market. Anyone want to approach that, Robin?
Sure. Our team's been very involved in the Brooklyn new development condo market for years. I would say it's more stable than Manhattan for sure. The discounts that sponsors are offering in Brooklyn for the most part are less than Manhattan. And the neighborhoods that are supply constrained and are desirable sort of residential destinations continue to perform. There are some neighborhoods that I think are oversupplied, specifically Dumbo. That neighborhood had a tremendous run up in pricing and development over the last, call it 10, 15 years. But now you have, basically 4 projects with, could be close to, 500 condominium units that need to be sold. But then you go to a neighborhood like, Brooklyn Heights, and it's only, a 5-10 minute walk away, but it's significantly supply constrained. So I think a lot of it is, really looking at the supply demand metrics. And also, I think what else is finding interesting is Brooklyn continues to go stretch further out. And the pricing that's being achieved in sort of the outer areas of Brooklyn is really impressive. We have projects that are, into the $1,200 per square foot range where, years ago that was like a $750 a foot market. So it is impressive to see the growth in Brooklyn and how people continue to to want to live there.
When we talk about available land, one of the sections of Brooklyn that has available land is Coney Island, okay? And the only thing that's really taken place over there is affordable housing and John Catsimatidis property. What's your thoughts about the Coney Island? I think part of the problem is the commute. It's a long distance. The subway is an hour into the city and so on. Robin or Michael or Chris on the thoughts of, areas like Coney Island.
It used to be location, location, location. And really now for me in the office, and I like to hear what Robin and Michael think in the residential, it's location, location, transportation has become so important. Even though Uber and Lyft has upended sort of the commuting pattern and how people get to work or how to get home from where they are, I still think that transportation is extremely important. Coney Island as a sub-market does well for, I think, more local buyers. I think if you're working in New York City, I think Coney Island, as you just said, that stresses the point of transportation, I think.
I'd echo those sentiments. I think what we've seen over COVID is a lot of people move to the boroughs looking for more space and value. And I think that those migrations are likely here to stay. And so I think they're quasi-suburban locations. They have great transportation. People are into Manhattan within, 20 minutes, 30 minutes. These are, neighborhoods which I think are that much stronger as a result of the COVID crisis. But I think a place like Coney Island is just more challenging, to commute back into Manhattan.
Part of the benefit, like Williamsburg, is that the L train is finally taken care of, which everybody projected to be longer, and the ferries. And I believe the ferries have been a very valuable market, help to the sales market. Chris, since, as I brought up before, you have the property in Long Island City, and I know Robin's involved, what's happening in Long Island City? Because it's a very short 10-minute commute into Manhattan.
Listen, you know, we own a large office building in the city, you know, One Court Square used to be the Citibank building. Now it's got the Altice sign on it, 1.5 million square feet. You know, we had Amazon was going to take the building and then they backed out for a variety of different reasons. We've signed, you know, 450,000 square feet of leases, a big one with Altice, and also with Centene Healthcare. Yeah, and because of where we're located, we're on 4 subway lines. We're seeing a tremendous amount of activity on the leasing side for office. And I think that the market in general is doing really, really well. I think, you know, the rentals are doing great. You know, there are a lot of condos that have been brought to the market. Those are slowly working their way through the market. But Long Island City is here to stay, and it's a great place to live in. And again, it's becoming a 24/7 live, work, play neighborhood.
So I think in summation, as opposed to someone saying, is the market dead? I'd say the market is very positive. It's great to see the increases over year. I'm happy to see that lenders I know who I've been talking to are still cautious, and I think it's smart to be cautious and to deal with, you know, well-proven developers, and location is very important. Needless to say, I'd like to thank Chris, Michael Givner, and last but not least, my research analyst, expert Robin Schneiderman, and see you next week.
Thanks.